Welcome to Countarts. In this lesson, we're going to be looking at the trial balance. This is our 5th lesson in our series on accounting for beginners. I hope you have checked out our first 4 lessons on accounting for beginners. We have them listed in the links in the description below for your convenience. So if you haven't checked those ones out and it's your first time looking at the trial balance, or you do not understand what it is or how it's completed, if you check out those lessons first, it will greatly simplify this one here. So we're going to explain what the trial balance is. We're going to go through some examples in completing the trial balance, as well as differentiating between the pre-adjustment trial balance and the post-adjustment trial balance. And we will complete a post-adjustment trial balance from a pre-adjustment trial balance in this lesson as well. So what is a trial balance? In fact, it's something important to understand, not just for you as a student, but if you are an entrepreneur or you are in business or you're running your own business, a trial balance will be very key, because this is what is usually prepared before the financial statements are prepared. In fact, we prepare financial statements for a lot of our clients, and one of the things that we prepare before that is the trial balance, or many of our clients actually send us the trial balance they have already prepared, and we just populate them and do the annual financial statement. So the trial balance is quite important. This is a report that shows the balances of all general ledger accounts of an entity at a specific point in time. So it shows all the general ledger accounts. And remember, in our previous lesson on accounting for beginners, I think it was lesson 3, we looked at the general ledger accounts and how to complete them. So it should be easy for you as we look at this one here, because after doing the general ledger accounts, you arrive at the trial balance, where you are bringing all those accounts after balancing them off and putting them in the trial balance. Now, I must mention that in this day and age where we have so many accounting softwares, and in the advent of fourth industrial revolution, we don't have to do things as traditionally as we used to do in the past. So you will find that doing the general ledger accounts and many of the things that we still actually learn in accounting are not actually practiced in business, because they have so many softwares. Like we ourselves use QuickBooks, so we do not have to do all the manual tasks of preparing accounts like the general ledger accounts. But it's important for you to understand exactly what it is and how it works, so that you are able to understand what the financial statements are comprising of and how we arrived at those figures. So that is what the trial balance is. It's a report that shows all the balances of the general ledger accounts, and it's at a specific point in time. So it might be monthly, might be quarterly, but it's usually at the end of the financial period where you're doing your final trial balance or your post-adjustment trial balance before you do your annual financial statements. It is a list of accounts with the amounts in either the debit column or the credit column. So if you have checked out our other lessons, it should be quite easy for you here. The principles we applied in knowing what to debit and what to credit are exactly the same when you come to the trial balance, and you'll see how that works just now. If you have applied the double entry principle correctly, the result is that the total of all the debit entries in the general ledger should be equal to the total of all the credit entries. And you will see that, in fact, your trial balance has to balance as well. Your debits must equal your credits. And remember, that is what we started with. We started with the accounting equation, and we showed you that assets must equal equity plus liabilities. That means your debits, or the total of your debits, must equal the total of your credit. Now, leading up to here so far, we have looked at various examples, and we're going to use those exact same examples to show you how to balance the trial balance, or how to make sure you have done it correctly. So if you have applied the double entry principle correctly, then your debits will equal your credits, as we have just mentioned here. So that means that the trial balance is therefore used to determine whether the double entry principle has been correctly applied for every transaction that has been recorded and posted. So that is what the trial balance will show you at the end of the day. It is usually prepared monthly in order to prepare reports for internal use. Like we mentioned, it can be prepared monthly. Primarily though, the trial balance at the end of the financial year is prepared in order to draw the financial statements for the financial year, like we have mentioned as well. And it is applied even today. Like we said, many of our clients either send us their trial balance or send us their books if we are not managing their books ourselves, and we compute the trial balance and then complete the financial statements. All right, so what does the trial balance look like? Well, we have an example of a trial balance here, completed one, and you'll be able to see how easy it is to do the trial balance. Here is an example. We took it from one of our previous lessons that we did. We have the name of the report here, pre-adjustment trial balance. And by the way, there is pre-adjustment trial balance and post-adjustment trial balance. Pre-adjustment trial balance, it is like it says, pre-adjustment, before adjustments are made. So it's a pre-adjustment trial balance on 28 February 2020 for this particular one here. Once you've made the adjustments, you'll have what is called the post-adjustment trial balance. But I must tell you this, it looks exactly the same, only the amounts would change if you have any adjustments. So what I mean by that is that if you look at the trial balance without anyone telling you whether it's a pre-adjustment trial balance or a post-adjustment trial balance, there's no way for you to know whether it's a pre-adjustment or a post-adjustment. So this is exactly how a trial balance would look like. But what I'd like us to pay attention to is what the sections are in the trial balance. You have two sections of your trial balance. The first one is the balance sheet section. As you can see here on top, the balance sheet section usually has assets, your liabilities, your capital, and the drawings. They would appear on the balance sheet section. All right, and it's also easy to know what goes to which section. And under the nominal account section, we have all our income and expenses. Okay, it's very important for you to note that nominal account section is our income and expenses, and obviously that's what will go to our statement of comprehensive income or the income statement. You'll find them under the nominal account section. But what goes into the statement of financial position is what you find in the balance sheet account section of the trial balance. As you can see here, we have assets, we have capital, we have drawings, and we have liabilities. All right, income and expenses, nominal account section. So I hope you're able to figure that out and pick that out right away. Again, we have done another lesson, which was lesson number 4, where we looked at accruals and prepayments. That's also very important when you're looking at the trial balance, especially as a student. Many of the questions that is asked around the trial balance relates to prepayments and accruals. So if you check that one out, then you should be able to understand this one much better. All right, so let's say you are asked to prepare a trial balance. Now, what we're going to do firstly is to take the exact same questions we've been dealing with from lesson 1. We looked at them at lesson 2 and lesson 3 as well. What we're going to do is to take them and do a trial balance using the exact same examples. I want to show you how it applies here in the trial balance. And remember, well, like we said, what a trial balance is where we are taking the totals of all the general ledger accounts, all right, after we've balanced them off. So look at what we have here. We have the trial balance, we have the debit on the left and credit on the right, as we saw with the format we just showed in the previous slide. And then we're going to start with the balance sheet accounts section. The first thing that we remember doing here is the general ledger for bank, and we balanced off the account. So if you'd like to check this lesson out on how we did the general ledger accounts, you'll find it under lesson 3. All right, and we balanced off the account and we got 15,150 rand. That's what we meant when we said you're taking the total of all the general ledger accounts. So that means once we have done that, we take this 15,150 rand and put it in our trial balance. And you can see here we have bank 15,150 rand. Now, bank is the only one we did actually balance off. So the other ones we didn't balance them off, but we'll add them and put them in to our trial balance. So just bear that in mind. And the reason we only did bank is because we're just showing you how to balance off accounts. Another example we looked at here is the capital account, where the owner invested money in the business, and we had done the general journal account and we did the general ledger account in lesson 2 and lesson 3 respectively. So we're not gonna focus on the bank one here because we already balanced it off and we've put the amount in our trial balance. But the capital, we have not put it yet in our trial balance and we didn't balance it off. So what we'll need to do is to make sure we add all the transactions where capital is involved. So the first one we have here is 20,000, and remember we said capital also goes into the balance sheet accounts section of the trial balance. So you can see here capital, we have 20,000 rand. The reason I haven't put it up here under our columns yet is because we may have another capital and we'll need to take it into account before we put it there. So first one we have is 20,000 rand, and remember capital under the acronym we gave into how to simply know whether we are debiting it or credit it. We know exactly where it should go. It should go on the credit side. So before we do that, obviously we make sure we've taken everything relating to capital into account. So what I'm doing here is I'm taking the exact same examples we looked at and just doing a trial balance out of it to show you that it actually balances at the end of the day. The next one we looked at here is the transaction where we bought inventory on credit, and we realized that we have two accounts here, which was inventory and trade payables. Now inventory is an asset, as we saw from lesson 1, and trade payables is a liability, as we also saw in lesson 1. So we need to record it in the balance sheet account section. Remember, assets, liabilities, capital and drawings go into the balance sheet account section of the trial balance. So we're going to have inventory 3,000 rand and trade payables 3,000 rand. I've put it here in brackets as well because we may have more transactions where inventory and trade payables are affected, so we need to add them together before we put them into our columns. All right, and then the next one we have here is the telephone account. So we have telephone here and we have bank account. Remember, bank, we're not going to focus on it because we did balance it off and we've already put our amount. So the only one we have here is telephone. But what is telephone? Well, as we saw in our previous lessons, telephone is an expense, and an expense goes under the nominal accounts section. So that means telephone account, we have to put it under the nominal account section, and it's 700 rand. And why did I put it into our column? Well, because I know we don't have any other transaction where telephone is involved, all right, as we saw in our previous examples as well. This is the only transaction with telephone. That's why I just put it here. And remember, we put it on the debit side because telephone is an expense. Remember the acronym DEDCLIC. If you do not remember it or you do not know it, chances are you didn't check out that lesson, so you can go back and check out the lesson, or you'll find it in the link in the description below. All right, let's go and find the next one. We have another one for inventory where we bought inventory by check 1,500. So obviously it's bank and inventory. Again, bank, we're not taking it into account because we balanced it off. And remember, if you've balanced off all your accounts, or you're given the balances after they've balanced it off, or you're given all the general ledger account balances after they were balanced off, then it's easy. You just know where to plug them in your trial balance. So we have another inventory here which was coming into the business. So obviously we're going to add the 3,000 rand plus the 1,500 rand for our second transaction relating to inventory. All right, let's go back and look at the next one we have here, trade payables, where we paid the supplier 3,000 rand. Trade payables is a liability. If we are paying our supplier, then it's reducing our trade payables. So we're going to minus 3,000 rand here. As you can see, 3,000 rand which we initially owed minus 3,000 rand which we have paid for our payables, and we have nothing. Okay, trade payables is a liability, increases on the credit side. So 3,000 minus 3,000 is 0. Now what would happen here is that if you have 0 for any of the accounts, then you might leave it out. All right, because if you do the general ledger also for trade payables, for instance, you would realize that the balance brought down is actually 0 because there was nothing left that we owed to our suppliers for this particular account. So that's why we have no trade payables, or we have 0 for trade payables. The next one we have here is stationery, all right, and bank. And obviously we bought stationery here by check, 150 rand. What is stationery? Stationery is an expense, and that means we are going to put it under the nominal accounts section. So we're going to have stationery under nominal account section and put 150 there. And then we go back and we have drawings. Remember, bank, we are leaving it out like I've been mentioning. So we have drawings here. Where does drawings go? Drawings go under the balance sheet account section. I'm moving a bit fast here because we have done this lesson previously, like I have been mentioning. So you should be able to be very well familiar with this. So for drawings, it's on the debit side because our drawings increase on the debit side, as we have mentioned in our previous lesson, and it goes under the balance sheet account section. So we put drawings there of 2,000 rand. Let's go back and see the next one we have is rent income. What is rent income? Rent income is an income account, so it goes under the nominal account section. I hope you are able to see here how we deal with transactions or how we deal with accounts when we have to do a trial balance. First question you ask yourself, is it an asset? Is it a liability? Is it capital? Is it drawings? Then you know it goes under the balance sheet account section. Or is it income or is it an expense? Then you know those two go under the nominal accounts section. But you also have to know where you debit and where you credit, and that's why those first lessons we looked at were very key in understanding your trial balance as well. So rent income is an income account, goes under the nominal accounts section, and it's on the credit side because income increases on the credit side. So as you can see, you have rent income 2,500 and we put it on the credit side. Let's go back again. You can see here the owner contributed a vehicle, and that's a capital account. So the vehicle account is increasing because a vehicle is coming into the business. The capital is also increasing because the owner increased in his capital contribution by bringing in a vehicle. So we have vehicle and capital. Vehicle is an asset. It goes under the balance sheet account section, and capital also goes under the balance sheet account section, as I've mentioned. So they're both 30,000 rand. So put the vehicle 30,000 rand, and capital we've increased it by 30,000 rand. So it's the 20,000 rand we have done before and the 30,000 rand, and you've got 50,000 rand for capital, and then for vehicle it's 30,000 rand. Remember, vehicle is an asset, so it increases on the debit side. All right, and inventory, and remember there's nothing on inventory there, so we just put the total here, 4,500 rand. And those were the transactions that we have been dealing with in our previous lessons, and we have looked at them here. Those were the only transactions, by the way, and we also did these exact same transactions when we looked at the accounting equation. So you should be able to see how the accounting equation works together or correlates to the trial balance. Now that we've done all our transactions, if we did everything correctly, if the double entry system was applied correctly, then our debit should equal our credit. So let's add together our debit column and our credit column, and I can tell you that they do balance because we did our accounting equation in our very first lesson correctly, and we obviously did our journals correctly and our general ledger accounts correctly. So we have here 52,500 rand on the debit side and 52,500 rand on the credit side. Why is it matching, or why does the debit equal the credit? Well, because of the accounting equation. And I did mention on that very first lesson, if the accounting equation is well understood, you are well on your way to understanding every other lesson that you will be looking at with regard to accounting, even the financial statements. When you look at the financial statement, you will see that the accounting equation is still applied there. So you should be able to bear that in mind. You can see how we take the exact same examples we looked at in the accounting equation, and now we use it to do the trial balance, or how to do the general journal accounts and now doing the trial balance, or how to do the ledger accounts and now doing the trial balance, and you can see how they work together. Now what I'd like to do here is to show you how to do the post-adjustment trial balance when you have adjustment. What is a post-adjustment trial balance? What is a pre-adjustment trial balance? Well, a pre-adjustment trial balance is a trial balance that has already been prepared, but now we need to make some further adjustments after more information comes to light. All right, let's say your tenant paid you rent in advance for a few months, and now after looking at your records, you realize actually he has paid for 3 more months after the financial year end. That means for those 3 months, it's not for this particular financial period. That means they're not income yet. So you have to record it as income received in advance, which is a liability. And doing the post-adjustment trial balance, like I mentioned, it is very important for you to understand lesson 4, where we looked at prepayments and accruals. Once you have understood that one day, doing post adjustment trial balance is quite easy to do. So let's head over where we have the pre adjustment trial balance and additional information, and we have to complete the post adjustment trial balance. So here's our pre adjustment trial balance. As we are told on 28 February 2021. We are asked to use the information given below to prepare the post adjustment trial balance. So as you can see, the pre adjustment trial balance, if you go down here, you will note that it actually balances your debit is equal to your credit. So obviously that means the company had done everything correctly. Now we have to do some adjustments. Now I must mention that lesson 4 on accounting for beginners series is actually one of the most important one when you're dealing with pre-adjustment and post-adjustment trial balance, because most of the adjustments that you'll be looking at here has to do with prepayments and accruals. So please go ahead and check that one out if you haven't already, or if you want to check it out again for better understanding. But we'll highlight most of the issues here as we go ahead. So we're going to move a bit quicker in completing the post-adjustment trial balance. And let's go up again. What you'll see is that we have the balance sheet account section, and you can see details, your assets, your capital, your drawings, and your liabilities. If you go down here, your nominal account section is just your income and expenses. So let's look at additional information. The first one says that according to a physical stock taking, the following stocks were on hand on 28 February 2020. Trading stock 43,000 Rand and consumable stores 1,500 Rand. Now, the trading stock that you have here for the 3,000 Rand, what does it mean when it says physical stock taking? It means that the staff went to the warehouse and counted how much inventory they actually have. So they physically counted the inventory, and they saw that the inventory that we currently have in stock is worth for the 3,000 Rand. So what we need to do is to compare that to what we already have in our books, so what the company recorded in its books. So what you see here, trading inventory 44,700 Rand. So you can see that it has overestimated its inventory. So we need to correct that. So if a company has overestimated its inventory, that means that it has what is called trading stock deficit or trading inventory deficit. What that is an expense, and it's because the company thought that it had more inventory than it actually has, and it could have recorded it correctly. So the stock taking could have highlighted that maybe some went missing or some are broken, or whatever the case may be. So anyway, regardless of how it happened, what you know is that you have trading inventory deficit. So let me just say this: in your pre-adjustment trial balance, the amount for inventory there, if it's more than what you have after the physical stock taking in your additional information, then you have what is called trading stock or trading inventory deficit, and that is an expense. By knowing that it's an expense, you know that you have to put it under the nominal account section, because we put expenses and income under the nominal account section. But we also have to do an adjustment to our trading inventory up here. So what we need to do first up here is to just correct it from 44,700 to 43,000 Rand, because that's what we got from the physical stock taking. And then what we need to do is to take what it had been initially recorded at, which was 44,700 minus 43,000 Rand, to see what the difference is, or to see by how much we overstated our inventory. And obviously if you take 44,700 Rand minus 43,000, it will give you 1,700 Rand. So let me add another row here and write down trading inventory deficit. Remember, it's an expense, and what does that mean? It will go on the debit side because expenses are debited. You'd know that if you checked out our previous lessons. So we're going to write here the one which was initially recorded, 44,700, and then we minus the one which was done according to the physical stock taking, 43,000, and it gives us 1,700 Rand. All right, now we've just completed that one. Now let's look at the consumable stores. We're told consumable stores 1,500 Rand. What is consumable stores? Well, consumable stores, if I would put it simply, are the small items which are usually used in the business. That could be things like your batteries for your calculator or for your machine, or your printing paper, or envelopes that you use, or the cables that you buy, or cable ties. So those small items are what will be your consumable stores. But what it's telling us here, when you have it in your additional information, it's saying that this is how much you have left over. Remember, that's according to a physical stock taking. So they checked and they said No, we still have consumable stores worth 1,500 rand in stock. Now, it's very important that if you have consumable stores remaining, then it now is an asset. But whenever you buy consumable stores, look at this here in our pre-adjustment trial balance. Under the nominal account section, you'll see consumable stores 7,000 rand. That means when you buy consumable stores, you initially record it as an expense. Only what is left at the end of the year becomes an asset. So here's what we'll do. Consumable stores, you can see it's 7,000 rand. So we'll make an adjustment. You take 7,000 rand. But since we have something left over, then it reduces how much we expense as consumable stores. So we deduct the one which we have according to physical stock taking, the 1,500 rand. And we are left with 5,500 rand, and that's how much should be sitting here, 5,500 rand. Now we go back up to our balance sheet account section, and we will add here consumable stores on hand. And what is that? That is now an asset because it's remaining in the business. It's not an expense we incurred during this financial period. So we have to put it as an asset, and the amount there was 1,500, as you can see. So I hope that makes sense. Consumable stores on hand is an asset, but consumable stores is an expense. So whatever is left over from the consumable stores expense is moved over to be an asset because it's something we can use in the next financial period. I hope that has highlighted the issue. And another thing I must mention here is that consumable stores, you'll see that when you're doing your post-adjustment trial balance, some will not put consumable stores on hand under the balance sheet section, just like that. They would actually add it to the trading inventory here. So they would take 43,000 plus 1,500 and just call it all inventory. And even if you look at the notes to the financial statements, you'll actually see that trading inventory might include your consumable stores on hand. All right, so it's just important to highlight that. But if you put it as a separate line item in your post-adjustment trial balance, I highly doubt they would ever mark you incorrectly. They have never done so to anyone I know so far. So you can put it there as a separate line item just to show the different accounts. All right, now I can highlight number one because we've just completed it. And remember, what you can see here as I do my pre-adjustment trial balance, or as I do my post-adjustment trial balance rather, I am making adjustments to both the debit side and the credit side, or I'm making adjustments to the balance sheet account section and the nominal account section. That's just making sure that my account still balances. What I mean by that is that if one account is reducing, that means it's increasing another account. All right, so you just have to bear that in mind as you do your post adjustment trial balance, and you'll notice this as we go ahead with the following ones. All right, now let's look at the second one. Rates and taxes include a payment of 4,080 rand for the period 1 January 2020 to 30 April 2020. Now, like I said, if you looked at our previous lessons, I said accounting rises and falls on dates. All right, what I meant by that is that dates are extremely important in accounting when you're applying your principles, when you're applying the definitions that you'll be applying, or the recognition criteria. Everything you do with accounting, you must pay very careful attention to dates. All right, so let's look at this one here. When is our financial year end? Well, we are told here that this is a pre-adjustment trial balance on 28 February 2020. So that is our year end. So if we know that's our year end, we'll go back here. Rates and taxes include a payment for the period 1 January 2020 to 30 April 2020. We can see that we've made a payment for rates and taxes beyond our financial period. If it's outside of our 12 months or outside of our financial year end, that means we do not recognize it as an expense, but it becomes a prepayment. We've paid for it in advance. If you looked at our fourth lesson in accounting for beginners, this would be quite easy for you to do. So we know that we paid for rates and taxes for 2 extra months after our financial year end, because if our financial year end is 28 February 2020 or 29 February 2020, then we have paid for March 2020 and April 2020, which is outside our financial period. So we need to calculate how much that is and remove it from the rates and taxes expenses. So if you go up here, you can see under the nominal account section, because it's an expense, rates and taxes is 11,900 rand. So we have to remove the one we have paid for the 2 extra months. So it's going to be the 11,900 rand in our pre-adjustment trial balance minus the one that we have paid for the 2 extra months. Now, the rates and taxes were paid for 4 months, if I can see correctly. It's January 2020, February 2020, March 2020, and April 2020. So we know that this 4,080 rand is for 4 months. So we're going to take the 4,080 rand and then we multiply that by the 2 months, which we do not want, and we divide that by the 4 months because the full amount is for 4 months. And that will give us how much is the actual rates and taxes incurred in our financial period, or within our financial period or financial year end. And that gives us an answer of 9,860 Rand. So we're going to put here rates and taxes that we actually incurred during this financial period is 9,860 Rand. What about the one that we've just deducted? Where does it go? Well, you should know that it's prepayment, like I mentioned. So a prepayment is an asset to us as a company. So we paid for it in advance. So it's prepaid expense, and that is an asset because it's money that still belongs to us because we have not incurred the rates and taxes yet. So I'm going to put here prepaid expense, and obviously it's that 4080 in our additional information multiplied by the 2 months that we've paid in advance for March and April 2020, and we divide that by 4, and it gives us 2,040 Rand. Alright, that was easy enough. And by the way, prepaid expenses can be also included as part of debtors control. So you'll find that others will actually add debtors control and prepaid expenses together, alright, to give them a whole amount. But like I said, even if you put it separately as we've just done here, you should get it correctly. Alright, so let's go back and highlight this one here. I hope it was easy enough. If you've checked out our 4th lesson, it should be quite easy. Let's look at number 3. Depreciation is provided annually on vehicles at 25% per annum using the straight line method, and equipment at 20% per annum using the diminishing balance method. Now we'll be looking at depreciation in our coming lessons in dealing with accounting for beginners. But if you know your depreciation, I'll put a link to another lesson where we did on depreciation using the straight line method as well as using the diminishing balance method, but it's quite easy to do. So depreciation is provided annually on vehicles at 25% per annum using the straight line method, and equipment at 20% per annum using the diminishing balance method. So let's look at our pre-adjustment trial balance and see if they've done anything regarding depreciation here. You can see that we do not have depreciation here. That means we have to do a calculation for depreciation. And remember, depreciation is an expense, so we're going to include it under the nominal accounts section. But we also know that depreciation is added to accumulated depreciation, which makes it a negative asset account. Alright, more details on that will be provided in the lessons that is to follow, and you'll find the link to that lesson in the description below, as well as other lessons relating to depreciation. So let's go ahead and do this one here. Let's first do the vehicle one. We're told that the vehicle one is depreciated using the straight line method at 25%. So straight line method is quite easy to do, and the equipment is depreciated using the diminishing balance method. So let's do both of them. In fact, I can do my workings down here for you to just see what I am doing and how it's done. Okay, so depreciation. Alright, the first one we're going to do is depreciation for vehicle. So since it's the straight line method, like I said, it's quite easy to do that one. Very easy. So let's go back up and look at what the value for the vehicle is. It's 169,000 Rand. So we put here 169,000, and since it's straight line, we just multiply it by the percentage of depreciation. So the percentage there for vehicle is 25%. So just multiply that by 25%, and that is it. That is going to be the depreciation for the vehicle for the financial period. So 169,000 times 25% gives us an answer of 42,250 Rand. So we'll put that 42,250. Alright, that's as easy as it is using the straight line method. Now let's do the depreciation for equipment, which uses the diminishing balance method. It's equally easy, but it just has one extra layer to it. So let's look at the value for equipment here. We have equipment 180,000 Rand, but now we also have to take into account the accumulated depreciation for equipment on the 1st of March 2019, which is the beginning of this financial period, which we want. So it's 180,000 Rand minus 18,000 Rand, and then we'll multiply that by the percentage of depreciation, which is 20% for equipment, as you can see here. Alright, so we're going to take the 180,000 Rand minus 18,000 Rand, and then multiply that by the 20%. Alright, so you always deduct your accumulated depreciation at the beginning of the financial period if you're using the diminishing balance method. It gives us an answer of 32,400 Rand. Right, now we've just calculated depreciation using the two methods for vehicle and for equipment. Now if we add the two together, that's going to give us our total depreciation. So total equals to the 42,250 rand plus the 32,400, and gives us an answer of 74,650 rand. Right, that is going to be the value of depreciation. So we're going to put that down as our depreciation. So we'll go here, we add an extra row, and we write here depreciation. Remember, you have to add all the depreciation together for all your assets. Here we had equipment and vehicle, so we'll put it down here. There we go. All right, now that we've done that, what we need to do next is to add the depreciation for the respective assets to their accumulated depreciation. So what we do here is that for equipment, for instance, the accumulated depreciation so far is the 18,000 rand. So it's going to be 18,000 rand as given in the pre-adjustment trial balance plus the new depreciation that you have just calculated. And for equipment, it was 32,400 rand. So plus 32,400, and it gives us an answer of, you put it on the credit side because it's a negative asset account because it reduces your assets, 50,400 rand. All right, that's equipment. And we do the exact same thing for vehicle. The accumulated depreciation for vehicle is going to be the 50,700 rand plus the new depreciation we've just calculated, which is 42,250 rand. 42,250 rand gives us an answer of 92,950 rand. Now we have just completed what we needed to do for that line item number 3, so we can highlight it. All right, the next one we need to look at is number 4. The rent for February 2020 is still outstanding. So they didn't give us any amounts here, but it's quite easy to do that one as well. So you can see here under the nominal account section, the rent income we have is 53,900 rand, but we are told that the rent for February is still outstanding. That means the client has not, or the tenant has not paid us yet. So we know that this 53,900 rand is for 11 months. So we just need the rent for the 12th month. So here's how it is to do it quite easily. It's the 53,900 rand. And you multiply that by 12 months because that's what we want, and you divide that by the 11 months, and it will give us our answer. Alternatively, you could go the longer route. It's the 53,900 rand divided by 11. You get that answer, and you add that answer by the 53,900 rand which you have here. But you could also do it the way we've done it here. 53,900 rand times how many months we want. We want for 12 months, and we divide that by the 11 months because that's what it is that this 53,000 rand is for. It's for 11 months because the 12th month's one has not been received yet, and the answer that it gives us is 58,800 rand. So 58,800. all right, now that we have done that, we know that the client owes us money, so that is an accrued income, an income that we are yet to receive from our client. So we need to record it as an asset because it's money that belongs to us even though we have not received it yet. So accrued income, I'm going to put it down here. Again, you could put accrued income as part of your debtors control. So you could add the amount here as part of your debtors control and show a note to it, or you'll see it in the financial statements many showing a note to it. But you could also put it separately here, accrued income, and you put the amount there as, and remember it's an asset, so put it on the debit side. And this is where you could take the 53,900 which was initially given in the pre-adjustment trial balance with 3,900, just divide that by 11 to see how much it is for February which was not received, and that is what you record there. So it gives us an answer of 4,900. So we'll put here 4,900. Quite easy to do that one. Right, let's move on to the next one. So you can see here with each transaction you're doing, by the way, here's a tip that will greatly help you when you're doing a post-adjustment trial balance to make sure that it balances. You already know that for an adjustment that you make to one account in your pre-adjustment trial balance, it will automatically affect another account. Always remember that. You can't just do an adjustment to one account and think that solves it. For you to balance it, you need to make an adjustment to more than one account. Unless, of course, you're dealing with a situation where they say that there were some errors in the trial balance, you need to fix it. That's a different one. But if you have to do a post-adjustment trial balance, you just know that you need to make two adjustments, at least two adjustments, when you're doing your post-adjustment trial balance. All right, the fifth one says the loan with ACM Bank was obtained on 1st of March 2019, provide for the outstanding interest on loan. Repayment of the loan will only commence on the 1st of May 2020. So we are told here that the loan with ACM Bank was obtained on the 1st of March 2019. That makes our work easy because that was the beginning of this financial period. Remember, it started on the 1st of March 2019 and it ends on the 28th of February or 29th of February 2020. So we are asked to provide for the outstanding interest on loan. So here's how you do it. You just go up, and obviously we know our loan is a liability. It is in the balance sheet account section, and we can see here loan ACM Bank 11%, 88,000 rand. So if we take 88,000 rand, if you can take your calculator, type 88,000 rand times 11% gives you 9,680 rand. That means that's how much you should be seeing in your nominal account section. But as you can see here with our interest expense, interest on loan, here we go, 8,067 rand. That means it's not sufficient yet. We need to add the outstanding one. So what we need to do here is just do what I say that you need to do in your calculator. You take the 88,000 rand and just multiply that by 11%, and you know that is what should be sitting on the interest on loan here in our trial balance. So the answer here is going to be 9,680. Now what you need to remember is obviously another account must be affected. It's not just the interest on loan. So let me put here 9,680. Now I need to remove this one here, but you have to remember it. 8,067 rand. That means we have to take the 9,680 minus the 8,067 rand to see how much we still have to pay or how much we owe, because there is a liability, and liabilities are recorded in the balance sheet account section. So let me just add it here. And what is it called? That is called an accrued expense, right? An expense that you still have to pay or you still need to account for. Obviously, you should know that from our fourth lesson as well. Another way that it's put is added to the creditor's control. So you can add this accrued expense to your creditor's control as part of your creditor's control and then show a note on that. Otherwise, you can just put it as a separate line item. So as I say this, you can put them as separate line items, or you can add them to what I've said. You need to add them to our way it's usually added. So don't be surprised if you see it done differently elsewhere. So we have here the 9,680, 9,680 minus the 8,067, and that will give us how much we still need to pay for the interest on loan because we owe it. And by the way, it's on the credit side because it's a liability, and liabilities increase on the credit side. So the answer here is going to be 1,613, right? That is how much we still need to account for. That's how much we need to pay for the interest on loan that we have not paid yet. All right, that's it with that one there. I hope it was simple enough. Let's look at the sixth one. On the 28th of February 2020, a check of 2,500 was received from M. Edwin, whose account was previously written off as irrecoverable. No entry has been made for this. This is quite easy. This is bad debts recovered. Someone we had written off as irrecoverable has actually come back and pay us. That means we had written him off as a bad debt, but by our surprise he has paid us the money. So we need to record it. It's an income because we had removed it from our books as a bad debt. Now it's coming back to us. It's an income, so it's called bad debt recovered. And income is recorded in the nominal account section. So I'm going to add another row here and write down bad debts recovered, and the amount there is 2,500. And remember, income increases on the credit side, 2,500. Now if you go back there, you can see it says no entry has been made for this. That means we have not even made the adjustment to our bank account. So our bank account has increased, and the bank is an asset, increases on the debit side, and it's in the balance sheet account section. So we need to add the 2,500 to the 13,000 rand. So we're going to see here 13,000 plus the 2,500 rand, and it gives us an amount of 15,500 rand. Alright, I hope it was simple enough. You have to make an adjustment to your bank account as well because you've received the money from someone you had initially written off as irrecoverable, because we are told no entry has been made for this. That means the bank was also not adjusted for that. Alright, number 7, a debtor K. Inol who owed 5,000 rand is declared insolvent. His estate paid Villa Cargo 60 cents in the rent. This has been recorded. The balance of his account must now be written off. Now this is bad debts. We have to write them off as a bad debt, and remember, bad debts is an expense, so we need to record that as such. So we'll go back here and write bad debts if we do not have any already. All right, I don't see any bad debts here, so we go and add another row and write here bad debts. All right, and how much was it? We're told 5,000 rand, but he was only able to pay 60 cents in the rent, or another way to look at it, he was only able to pay 60% of the 5,000 rand. That means the rest is written off. So right here, 5,000 times, if he has paid 60%, the remaining 40% is a bad debt. All right, that is what it means when they say how much he was able to pay and how much he can't pay is the remaining. So 5,000 rand times the 40% or the 40 cents gives you 2,000 rand. So you write here 2,000 rand on the debit side because bad debt is an expense. All right, that was quite easy to do, but we still have to do the second account. What do you think that is? It's debtors control. So we need to go back up here and look at our debtors control. You can see here debtors control 73,000 rand. So obviously it reduces our debtors control. So it's 73,000 rand minus the 2,000 rand. All right, so when you write them off as a bad debt, you record the bad debt and you also reduce your debtors control, and it gives us 71,000 rand for our debtors control. I hope that was easy enough. So remember, we can see with everyone that you do, every transaction that you do, it affects at least 2 accounts or 2 line items in your pre-adjustment trial balance. And the next one, provision for bad debts must be adjusted to 5% of outstanding debtors control. Provision for bad debts is a negative asset account. So here's how you do it. Pay attention to this. Since it must be reduced or must be adjusted to 5% of outstanding debtors control, you just go back up here and you look at your debtors control. We just looked at it now. Where is it? It's here, debtors control, the 71,000 rand. And for provision for bad debts, it must be adjusted to 5% of the 71,000 rand. So we're going to take the 5%, multiply that by the 71,000, all right? And that will give us how much provision for bad debts should be, all right? That will give you an amount of 3,550 rand. So 3,550. Now, the reason I haven't removed this one, which was initially there in our pre-adjustment trial balance for provision for bad debts, is because I need to know how much that amount is. You can see it's 3,400, which was initially sitting there. So what we need to do is that we need to take the new provision for bad debts minus the 3,400 rand, and you can see that our provision for bad debts has actually gone up. It has increased from 3,400 rand to 3,550 rand. So if it has gone up, then we have what is called the provision for bad debt adjustment. By the way, whether it's gone up or gone down, you will call it provision for bad debts adjustment. But now, if it has gone up, it's an expense. If it had gone down, it should be an income, right? So now we're recording an expense because it went up from 3,400 to 3,550 rand. So put it down here, provision for bad debts adjustment. The amount there is the 3,550 rand minus the one which was initially in our pre-adjustment trial balance, the 3,400 rand, and it gives us 150 rand. So I'm just going to put the 150, and remember it's an expense, so it's on the debit side because our provision for bad debts went up. If it goes up, it's a bad thing because we're expecting more people not to pay us in the coming period. All right, I hope that has made sense. Let me highlight it. All right, we're going to move quicker now. Number 9 says a fixed deposit at ACM Bank was made on the 1st of March 2019, which was the beginning of this financial period, and matures on 31 July 2020. Provide for outstanding interest on fixed deposit. Exactly similar principle to what we did with the interest on loan. So we're going to take that into account. So if we go up to our balance sheet account section, we can see here fixed deposit ACM Bank 9% per annum. So we know our fixed deposit or interest on fixed deposit should be 150,000 rand times 9%. All right, so let's go back here. You can see what the interest on fixed deposit is currently at 11,250. So we write here 150,000 rand times that 9%. Right, and let's see how much that gives us. 13,500 rand. So I'm going to put here 13,500. Right, so it should be 13,500, but look at what we have accounted for. We've only accounted for 11,250 rand. That means we still have more that we still need to recover, or we still need to receive the remaining. So that is what we call accrued income, or income that we are yet to receive. So there is an asset. We'll go back to our nominal account section, and I'm going to put it down here. Right, I'm going to call it, you can call it accrued income, but remember we already have another accrued income up here. So for that was for rent, if you remember correctly, accrued income, and I'm going to put it in bracket as interest on fixed deposit. Again, this one here, you'll find that it's usually added, or some will add it to the debtors control column, so they will include it there, but you can also put it as a separate item. You can also call it interest on fixed deposit receivable or interest receivable, or accrued income and put interest on fixed deposit in brackets as I have done. And obviously it's going to be what we ought to have received versus what we have already received. So we're supposed to receive 13,500, but we actually received what was initially in the pre-adjustment trial balance, which is 11,250 rand, and that gives us an answer of 2,250 rand. So put here 2,250. Right, that was quite easy to do. So let's go down here and highlight that one. Alright, service fees according to the bank statement for February have not yet been recorded, 275 rand. Okay, so that's easy. Those are bank charges, so you can write it as bank charges or service fees. So you can add it to your bank charges here, 3,100 plus the one for service fees. So let's do just that. We're going to take the 3,100 rand and add the service fee. Right, how much was the service fee? It was 275 rand. Right, you could have put it as a separate line item, they would not mark you incorrectly, but service fees forms part of bank charges and it gives us an amount of 3,375 rand. All right, that was easy enough. Let's highlight that one there. Okay, the next one, an advertising campaign was launched on the 1st of July 2019 for a 12-month period and an amount of 18,800 was paid. The advertising account has not yet been adjusted. An equal amount was budgeted to be used each month for this campaign. Alright, so we paid for a campaign which was to go from the 1st of July 2019, and we were told that an equal amount was budgeted to be used each month for this campaign. That means we will take the 18,800 rand, divide by 12 months to see how much was budgeted to be used each month. But that is not our issue. Our issue is this advertising campaign here. We have paid for months which is outside our period, because if it started on the 1st of July 2019, if you add 12 months from the 1st of July 2019, you will realize that it ends on the 30th of June 2020. And remember, from March 2022 to the 30th of June 2020, that is outside our financial period. So we need to make an adjustment for that. So 18,800 is for 12 months, but we know March 2020, April 2020, May 2020, and June 2020 belongs to the next financial period. So we need to remove the advertising amount for the 4 months which is outside our financial period. Okay, if it doesn't make sense, just read the question again and understand what we are saying here. We've paid for months outside our financial period, so we need to remove the amount from that expense and put it as a prepaid expense. So we'll take 18,800 rand, divide by 12 times 4 months to see what we need to remove, or you can take 18,800 rand times 4 divided by 12 months. So let's go up here. You can see advertising is 22,630 rand, but we know it includes an amount which should not be here. So here's how we'll do the calculation: 22,630 in our pre-adjustment trial balance. Then you deduct the 18,800 times 4 divided by 12, because the 4 months is outside our financial period, and that will give us an answer of 16,363 rand. So we'll put that down here, 16,363. All right, so that is how much should be sitting in our advertising expense account. All right, but we know the extra 4 months is a prepaid expense, so we'll need to calculate how much that is and put it as a prepaid expense. Again, prepaid expenses can be put as part of our debtors control, but you can put it as a separate line item down here as well. The reason I'm doing that is so that you can see where it actually falls and which account goes where exactly, and you're able to exactly see for each account what it accounts for. Unless you have a note to show that, you wouldn't be able to see if it's added to the debtors control or to add it to the other accounts that I mentioned. So prepaid expense, you can put in bracket here if you want that it's for advertising or advertising paid in advance, and it's going to be the 18,800 rand times 4 divided by 12, because we paid for the 4 extra months, so we need to know how much we paid for in advance. So it's going to give us an answer of 6,267, 267. All right, that was easy to do. You just have to remember your principles, and if you remember your accruals and prepayments lesson, it should be easy for you to do this one, or you should have seen that it's actually easy. The telephone account for February 2020 has not yet been paid, 480 rand, right? So that's easy. They gave us the amount. So if we go up to the telephone account, we know that the 280, let's confirm, 480 rand, that is 480. So we take the one we have in the pre-adjustment trial balance, the 3950 plus 480, and that should be our telephone expense, and it gives us an amount of 4,430 rand. All right, that is our telephone expense. So we know that we've not paid for February, as we are told here has not yet been paid, and it belongs to our period. So we have what is called an accrued expense. We are yet to pay for the telephone expense. So let me add it down here. And where do you think that would go? Like I mentioned, you could have added it. So let me write here. You can write telephone payable. So let me write telephone payable. Or you could have written accrued expense, and you can indicate in brackets that is for telephone. Alternatively, it's usually added to your creditors control. So you can see any expenses that you still owe that you needed to pay, or any accrued expenses would be included as part of creditors control. If you included it, I don't think they mark you incorrectly, or if you put it as separate line items as we have shown here, they would not mark you incorrectly. So you just have to know that those are the two methods that are usually done. All right, but practically it's usually included so that you don't have so many line items, but a note is always included with the financial statements indicating the breakdown of creditors control or your debtors control, for instance, and the amount there is 480. And remember, it's actually a liability, so we should put it on the credit side over here. All right, and that is it for that one. So let's go down here and highlight that one, and as you can see, we've just completed our post adjustment trial balance. All right, we've done all that we needed to do, and what we need to now check for is if it balances, and if it balances, we know we've done everything exactly correctly. All right, if it doesn't balance, there's something we did incorrectly, but I'm sure it will balance. So let's add all the amounts together and make a change to these totals here and see how much it gives us.
A few moments later.
And I've just added them together, and what you'll note here is that they actually do not balance. And you can see the debit side is 1,690,737 rand, and the credit side is 1,690,462. Now if you subtract the two together and see what is the difference, you will note that the difference is actually 275 rand. And where is that from? So you just have to go down here and see number 10, 275 rand, the service fee. And I know exactly why it didn't balance and what we did incorrectly, or what we omitted. Actually, we didn't do that. So that 275 rand was the service fees according to the bank statements that was not yet recorded. So that 275, if it appeared in the bank statement, obviously we included it as part of our bank charges. So what we also need to do is to reduce our bank account. So we didn't do that. Remember, we're told here, let's go back to our note. Number 10 says service fees according to the bank statement for February 2020 have not yet been recorded, 275 rand. So we need to reduce our bank account by the 275 rand. So we'll go back up here, and we have bank here, so we need to also deduct the 275 rand. And by the way, it's actually good that it didn't balance, so that I could show you that amount without just removing it, because that is how you see what doesn't balance. If you've done everything correctly, if you know that one account always affects the second one, and that's why you have to do an adjustment on doing a post adjustment trial balance, then you will be able to pick up when you may have made an error. So if it doesn't balance, look at what the difference is and try and see if you can pick up any of the accounts with that same amount which is not balancing. All right, so we have to deduct the 275 because it's in the bank statement. It's a service fee and it reduces our bank account, so we needed to deduct it. And the answer for our bank account is going to be the 15,500 rand minus the 275, or you can take the 13,000 rand plus the 2,500 minus the 275, and it gives us an answer of 15,225 rand 225. Right, and if I go down here and I do my calculation, you will note that it actually balances. All right, if I add everything together that we've done, it actually does balance 1,690,462 rand, and that is how you do a post adjustment trial balance. Hope it was helpful. So having understood what the trial balance is, how to complete the trial balance, and how accounts are recorded in the trial balance, together with looking at pre-adjustment trial balance and post-adjustment trial balance, we will conclude with the limitations of the trial balance. And it does have limitations. Remember, the trial balance is not a perfect report that you complete. Even though the trial balance shows that the double entry principle has been applied, it does not imply that the accounting records have been recorded correctly. So what we're going to quickly look at here are some errors that the trial balance does not reveal. And the first one here is posting to the right side of the wrong account. That can happen. This is a result of an incorrect account being journalized. For example, inventory purchased for cash 5,000 Rand is recorded as a vehicle in the journal. Now, if you've looked at our previous lessons, it's easy for you to know how we should have recorded this. When we bought inventory for cash, we should have debited inventory and credited cash or bank. But if it's recorded as a vehicle in the journal, this will result in a debit to the vehicle account instead of the inventory account. However, the trial balance will still balance because you will correctly record the bank as a credit, but the debit, instead of putting it as inventory, you record it as a vehicle. And remember, vehicle is also debited. So your trial balance will still balance because you exchange one account which was a debit account with another one which was a debit account because they are both assets. So that is one of the limitations of the trial balance. When you post to the right side of the wrong account, the trial balance won't show that error. Alright, so the second one we have here is errors of omission. A transaction that was erroneously omitted will not be revealed by the trial balance because both the debit and credit entries for that transaction are left out, making the trial balance be in balance. For example, inventory purchase for 500 Rand cash was not recorded. If you do not record that transaction at all, the debit to inventory 500 Rand and credit to bank 500 Rand, obviously you would know that based on our previous lessons, are omitted for this transaction, making the two accounts understated by the same amount. So by omitting a specific transactions, your trial balance will still balance and it won't pick up that you have omitted a specific transaction because the debit and the credit will be left out for that particular transaction. I hope it's making sense here and you're able to see the limitations of a trial balance. And it's not perfect to say that once your trial balance balances, you've done absolutely everything correctly. No, these are some of the errors that the trial balance will not be able to pick up. The third one we have here are compensating errors. Now, this one's rarely happen, but what happens here is that when there is an error in adding, balancing, and posting on one side of a ledger account, is compensated for by an error with exactly the same amount on the other side of the ledger. So here's an example. An error in understating the debit side of equipment account by 300 Rand can be compensated by an omission on the credit side of creditor's control account. As such, both sides of the trial balance will be understated by 300 Rand, but the trial balance will still be in balance. So what are we saying? We're saying that if you've recorded all your transactions relating, for example, to equipment and you've understated it by 300 Rand for some reason, and you have omitted an amount of 300 Rand for creditor's control, that means the debit side omits 300 Rand, the credit side also omits 300 Rand, your trial balance will still be in balance. So it will not show those compensating errors where you've made an error on the right hand side and the left hand side of the same amount. Then you won't be able to know that by looking at your trial balance because it will still be in balance. And that is a trial balance. I hope you have understood it thoroughly. If you had not looked at the trial balance before this lesson and after looking at this lesson, you thoroughly understand the trial balance. I hope it has helped you. And if you're going to be in accounting or you're a bookkeeper or you're in business, this should also help you in compiling your books. If you have gained value from this lesson, if you have learned something, let us know in the comment section below. Like this video and share it to those you think it might help. And if you have not subscribed to our channel, go ahead and do that below. Till next time. Cheers.